Hi, good afternoon, and welcome to Biztech's Asian Midday Market Watch. I'm Brian Fernandez, and with me is my co-host, Samantha Voon. It's Thursday, the 27th of June, and let's start by looking at how stocks have performed in the first half of the day. Sam, over to you with today's market report.
Thank you, Brian. So, in Asia Pacific markets opened lower today as the Japanese yen weakened to a near 38-year low yesterday, hitting 160.82 against the US dollar. The yen last breached the 160 level against the dollar 2 months ago, prompting the Japanese government to prop it up in the country's first currency intervention since the 2022. Finance Minister Shunichi Suzuki said earlier today that the country was deeply concerned about the FX impact on the economy. This is according to Reuters. So Japan's year-on-year retail sales growth for May came in at 3% higher than the market forecast of 2%, according to Reuters' poll of economists. This compares with the revised 2% growth in April. The China's industrial profit grew 3.4% year-on-year from January to May, reaching a 2.75 trillion Chinese yuan, and that's equivalent to 378.41 million. So official data shows on Thursday the country's industrial profit for the first 4 months of this year had risen by 4.3%. The Japanese Nikkei 225 declined 1.07%, while the broad-based topics lost 0.45% in early trade. South Korea's Kospi declined 0.55%, while the small cap Kosdaq was up 0.16% in early trade. In Australia, the ASX 200 opened 1.14% lower. And in Hong Kong, the Hang Seng Index dropped more than 1%, while mainland China's CSI 300 was lower by 0.65%. Overnight in the US, the Dow Jones Industrial Average added 0.04%, while the S&P 500 rose 0.16%, and the Nasdaq Composite gained 0.49%. The Nasdaq climb was led by the Amazon shares, which recorded a 3.9% jump. The stock hit an all-time high and reached $2 trillion in market value for the first time on Wednesday, joining Nvidia, Apple, Alphabet, and Microsoft. With that, let's go over to our spotlight today, which is on cryptos, and our guest today is Kay Van-Petersen, Managing Partner at Ascent Capital, Strategic Executive Advisor at HODL Group. Welcome to the show, Kay.
Awesome to be on. Crypto Nation time. Let's go.
Yeah.
Kay, for a start now, what's the state of the crypto market right now as we head to the summer in the Northern Hemisphere? And what's the vibe on crypto Twitter?
So listen, it's a great question. What's the temperature? Let's put it like this. Towards the tail end of last year, kind of around October, November, to end of first quarter this year, it was pretty much lower left to upper right. It was the crypto train. There was no pullbacks, and it was an epic ride that also saw us, hit all-time highs with Bitcoin at 73,000. But as we go into the summer, I can tell you, man, CT is a dark place to get on today. Crypto Twitter, everyone's throwing in the towel. Everyone's depressed. Everyone thinks it's over, and of course, the Bears are having a field time. So that's the stage today, at least from a sentiment perspective. It's pretty bad.
Mm-hmm. Yeah, just like what you mentioned earlier, we have the price action, as you point out, has been very different after the first quarter. So how important are these 61,000 or 60,000 levels for Bitcoin?
So, from a technical perspective, that 60K level is pretty critical because if we break that, there's very little support, until kind of the 50,000 level. And honestly, I thought we were having that correction in April. I was bearish for a very kind of short term. We got to, I think, roughly 56 and a half, and then we bounced straight back up. And we seemed like we were done with that, right? We got set back a few weeks back with a U.S. non-farm payroll number that came in much better than expected, at least from a headline. But the underlying thing is the price action has just been very, very, very poor. So it's critical that it holds, but the fact that we're retesting it again is just a higher probability that the risk is potentially still more to the downside, right? At least in the near term.
Now, Kay, one of the reasons we brought you on this show is you're an old hat in the crypto space. You've been around this space since 2013. You've seen a few cycles. What are your thoughts on today's cycle, this current cycle? What should crypto investors and, of course, speculators expect?
Yeah, because these are two very different things, right? And I've been around since 2012 when I read the white paper, bought first crypto exposure 2013. So I know just enough to be dangerous. There's no experts in this space, right? It's growing so fast. The things under the hood are just incredible and mind blowing. But I would say, this is common. This has happened in every bull market cycle. You have a period where there's bearish price action. You have a period where there's huge drawdowns, right? We're only down 16%, from all-time highs with Bitcoin here at 61K. And in all the previous bull market cycles, you've had drawdowns of up to 40% at some point on Bitcoin. So you can imagine what happens in the rest of the space. Our viewpoint is, if you look at history rhyming, the tip of, should I say, the height of the peak of the cycle tends to happen about 560 days after the halving, which basically puts us in track for, call it the tail end of 2025, early 2026. And the real kind of price action, tends to kick off 9, 12 to 18 months kind of afterwards. So we're just getting started. You have to take a step back and look at the big picture, right?
Mm-hmm. So do you think it was too much hype, the halving?
100%. We were all talking about Bitcoin runes and God knows what, wizards. And yeah, it was absolutely too much hype going into it. That also kind of coincided with the change, at least in the short term, kind of price action. Historically, and your viewers can check this out. This is not even our own research, so it's third party. So Social Capital put something up where they studied the halving cycles. And generally speaking, you see nothing for the first 3 to 6 months. And remember, the halving was 19th of April, right? 2024. And then around 9 months, based on the last two cycles, you see about a 2 to 5x, so call it average 3x on Bitcoin. Then 12 months, it starts to get closer to a 5. And then 18 months is when it really takes off. So basically, that puts us in line for the party doesn't really start until tail end of this year to really early next year, with us seeing the cycle peak, at least historically, towards the tail end of next year. So that's our viewpoint. We still have 150K from the HODL Group as a Bitcoin price target. We don't think that's aggressive at all. And of course, people out there have much, much higher targets as a whole.
Interesting. So 150K as a price target and a peak cycle looking at tail end of 2025, 2026, right? Thematically,
Exactly.
what should an investor, what are investment themes and stuff that we should be looking at?
Well, listen, outside of having a world-class asset manager like HODL managing your money, which is what we do day in, day out, but, all jokes aside, you do tend to want to rely on people with the track record, with the pedigree, who do nothing else, right? And there's far and few in between, despite crypto being around, for a little bit over 14, 15 kind of years now. But from a theme perspective, and we've released quite a bit of research on this, I think what's hard is what themes are going to stay, right? It's very easy to find something hot for a week or two. We were talking about this Samantha offline, who's trading, brave enough to trade this market. But I think the themes that are here to stay are going to be AI, real world assets, right? As a whole. The ecosystems around Base is very, very underrated today, as well as kind of Solana. BRC20 potentially to a lesser extent. Our venture fund is definitely also focusing on those three. And then, of course, the theme that a lot of people just misunderstand, which is, of course, memes, is not going anywhere anytime soon.
Yes, memes. It gives a lot of people headaches and it makes a lot of people a lot of money. So before we close, is there any thoughts in general in relation to crypto that you'd like to share with the audience, Kay?
I think it's just a reminder this is an asset class that's here to stay. This is a technology that will touch every aspect of our business and society. So not just from a financial perspective, but also governance, a sovereignty perspective, centralization versus decentralization. Today, the space is only, 2.5 trillion. It's going to eventually be a space that's going to be worth tens of trillions of dollars, right? Outside of the HODL funds, I'll say this, my biggest allocation is in something called Ondo, which is backed by BlackRock. And that basically is showing you how this cycle is so different. Real institutional players, i.e. an $8 to $10 trillion asset manager coming in back in real world assets. It's not going to happen overnight, but it's a space that you can't ignore.
Okay, thank you very much for coming on. It was really great insights.
Always a pleasure being on. Thanks for having me, guys.
Now, we've been speaking to Kay Van-Petersen, Managing Director of Ascent Capital, as well as Strategic Executive Advisor at HODL Group. This has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Remember to like and subscribe to our various platforms. Thanks a lot for tuning in.